So they've ratcheted up these rates. And, obviously we saw, our inflation go from like 9.1 to 3.0 in June of 23. So that was about a year ago that we saw these rates come way, way, way down. So the Fed basically thought that they were going to be, able to just, set back. They went from 9 to 3. So going to 2 is not going to be difficult. And ultimately, we've stayed range bound here.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Hey, guess what? The Fed didn't cut rates. What is wrong with the world here? How can this be? Is this a tragedy of biblical proportions? Is this as bad as the flooding currently going on in China? Well, David Stryzewski is with us now. David, I'm crestfallen, and yet the market goes up. What is going on here?
Well, the Fed has sort of got this idea in mind that they've reached what they call a terminal rate. So they've ratcheted up these rates. And, obviously we saw, our inflation go from like 9.1 to 3.0 in June of 23. So that was about a year ago that we saw these rates come way, way, way down. So the Fed basically thought that they were going to be, able to just, set back. They went from 9 to 3. So going to 2 is not going to be difficult. And ultimately, we've stayed range bound here, somewhere between 3 to 3.9, and about an average about 3.3 in these numbers. And so what's going on in the market right now? Well, hey, you know what? The market wants to rally. We've seen pullbacks. We've seen, the bulls and the bears kind of do their back and forth right now. And, it's easy to see that, whether it's political or financial commentators, we can all say both positive and negative things about where we are currently right now. And so I personally believe that a lot of this data is deteriorating quickly, but July is the best month historically for the market, and it looks like today is no exception to that.
It's pretty amazing. I mean, it just it looks like this bump that the market got is quickly fading, but inflation, it ain't going away.
No, it's not going away. You're right. So, we've had inflation that's been above, 3 and not below for 13 months. In fact, I think it's 38 months that we've had inflation higher than 3% in general. So I don't see inflation going away. In fact, if you think back to Milton Friedman, which I know that you're a student of as well, he would tell you that, printing is literally the cause of inflation. Inflation is caused by central banks printing. And so this is the tax of least resistance. And so it is a tax. It's a tax on the world. It's a tax on the American consumer. We're inflating our dollar right now. And so, basically we haven't seen inflation move in over a year. We have had all these false narratives as far as, hey, the Fed's going to be cutting any day now. I mean, last July it was supposed to be cutting. Well, no, we got the pause. So it's been a year since everything's been paused. And, and now we're looking for this rate cut. But one thing to understand as well is that historically when rate cuts occur, that's actually when the recessions happen, is just following that. So if we even get rate cuts, it's not like a really great sign because that means that things have deteriorated in a way that are not, exactly peachy and wonderful and great for the economy, at least as far as the middle class is concerned.
Yeah. Well, when rates start coming down, that's when everything hits the fan. Hey, actually, the rates now, even though they don't look good because we've had nearly 20 years of declining interest rates, are kind of normalized, 5% T-bills, right? I mean, That's what you want. That's the historic interest rate. And the fact is that over the past 10 years, we've had these, since the Great Recession of 08 and 09, we've had these sub-normal rates. And they were heading into the Great Recession. So what would happen if they cut rates before there was a recession, David?
Well, what you're going to see is inflation get even deeper rooted into our economy, and it's going to cause things to just really, inflate. The stock market's going to go up. And by the way, the stock market is actually not a true barometer of what's going on in the economy. It just happens to be a barometer of economic health. I personally believe that our economies should be judged by how well the middle class is doing or not doing. And in that case, we're in a big and challenging spot. If you cut interest rates right now 0.25%, does that lower the mortgage interest rates in a meaningful way that people are going to get back out and start buying things? Not a chance. In fact, we're seeing inventories build right now. And with the interest rate level that we got, to your point, we had these low interest rates for about 15 years. And then now they got ratcheted up at the fastest pace that we've ever experienced here, at least in the United States. And so that's significant change has flipped the entire market. And the world runs on credit, specifically U.S. dollar credit. And so this affects and impacts everything. I mean, we were talking a little bit before this, the impacts on China right now are massive. Japan, massive. There's a lot of change that's taking place all over the earth right now as a result of this. But, I don't think that the Fed's going to be able to get these down in a meaningful way. Just because we saw things trend a little bit better right now, they're going to need at least 2 months worth of data, or 2 different times that they sit down trending in the positive direction or lower than where they are right now. And if they're going to see anything. So I don't expect anything even in September, even though I know that that's like a guarantee right now, according to Wall Street. You're not going to see it happen unless there's a major crisis. And then I think that they're going to turn on the printing press, and that's basically their only option.
Hey, and I'm just surprised that they must think the election is such a lost cause that they're not even bothering to monkey with the rates, right?
Well, it's an interesting thing. The Fed can do a lot of things. I believe that they're very partisan. Actually, where they say, hey, we don't comment on political things. Well, politicians can't lean on the Fed and say lower rates so I get elected. But the Fed should say, and I believe it would be negligence to not say, hey, Congress, this print and spend stuff that you're doing, this is the cause of inflation. All the raises that we're doing, you're doing the counterintuitive thing. You're making this worse for the people that you quote unquote represent. And so one of the things I like to be talking to people about right now is I like to say, elections definitely matter. And it doesn't matter what side of the aisle that you're on right now. You believe that this is one of the most important elections in the United States history. And I believe that that's true. The thing, though, that I want to point out is that elections matter a lot less when we have the right risk diversified approach to our investment strategy, when we have the right strategy approach to this rate changing environment, as we're moving from maybe more of a growth situation to a values type of an economy, maybe individual stocks versus ETFs. Like, there's a lot of different strategies that we can employ. And then the third thing would be tax diversification strategies. And I really think this is something that is not being discussed right now very much. And, if we continue to print like this, what's going to happen with taxes? We're going to have to raise taxes in order to continue to pay for everything, including, deficits now that are in excess of $1 trillion every 100 days. So we're blowing our budget by $1 trillion every 100 days today. And this is just in an unsustainable way, trending backwards.
Yeah,
so elections matter. They don't matter as much when you get risk diversified, strategy diversified, tax diversified.
Hey, couldn't agree with you more. In the meantime, President Trump is out there. First, he promised the waiters and waitresses and bartenders no tax on their tips.
Right.
That's inflationary. Today, just heard that he's promising all the people getting, government checks, Social Security, no tax on them. I mean, who's going to be left to pay taxes here?
Yeah, I mean, perhaps that's an appeal to sort of like that mid and lower
pandering,
voter. Maybe a little pandering. Doesn't sound to me specifically like a bribe, like the college education stuff that the Supreme Court has been saying that they're not going to be doing it right now. So, I don't know. There's a lot of going on, but these election years tend to have a lot of promises. We'll see what ultimately gets delivered. But ultimately, our economy does need to grow, and we have to be able to figure out as a nation and who leads the world, how are we going to lead forward? And so I do think it's going to come down to supply side economics.
Well, the problem is when Trump makes these promises, he's actually a politician who keeps his promises.
That's true.
So what is he going to do? He's got to eviscerate the federal government, literally. I mean, look, do we need the Fed buying up mortgages now? Do we need Fannie, Freddie, and the whole apparatus artificially supporting real estate? Yeah, if we got rid of them back in 2008 and 9, really structurally reorganized the entire financial sector, we wouldn't be in this situation now, would we?
No. And honestly, we continue to get ourselves into deeper places when we don't address the problems that got us there. Like when the banks are needing bailouts and they're the ones that actually led us to these broken places, no one goes to jail. And oh, by the way, I personally believe and can see that we're going to see another banking crisis, and it's just going to continue to unfold right now. I think we're in the second half of this, just starting out. The Fed FDIC told us we got 63 banks that are insolvent right now. Hundreds or thousands, are just right behind that. I think the system needs reform. Hopefully the national debate and conversation can happen as opposed to just by executive order doing everything like we've seen with the border here in the last few years, et cetera. So, this is where real conversations with real adults need to be happening. And I just wish and pray and hope that we as a nation can get to the place of trying to come up with some solutions as opposed to just pointing out problems, throwing stones, and going to our political corner, blue no matter who, or red till I'm dead.
Yeah, well, it's like it's got to stop. And financial fiscal sanity has got to reassert itself because we can't go on this way. Unsustainable. David, just tell us, where do we find you? How do we connect with you on the web?
Yeah, so website is myspg for soundplanninggroup.com. Got a number of things that are coming out here, courses, got a book that's been a long time coming. It's getting out here pretty soon, Kerry. Riding Bulls and Taming Bears, Investing for Retirement in the 21st Century. And
Can't wait to see it. Can't wait.
Yes, sir.
All right. Hey, if you've got a question for David, myself, KL@Kerry Lutz. That's the email address. We'll get you an answer. And to get to David's site, the link is in the show notes to this interview on financialsurvivalnetwork.com. While you're there, sign up for your free newsletter. David, always a pleasure. Thanks for coming by.
Hey, pleasure's mine, Kerry. Look forward to talking with you soon.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.